Hey everyone, Dylan here, out here at Lake Hartwell, little park, and wanted to go over something real quick that I've been asked a few times. What is owner financing? Well, and what's going on with owner financing, and why owner financing, and blah, 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 blah. So let's go over some things real quick. What is owner financing at its basic level? At its basic level, what owner financing is the owner of the house is financing to you, meaning they're the bank, you're the consumer, and they're going to finance the sale of the house to you. Now, why would this be right for you? Well, let's say you go to the bank and interest rates are 8.25% for your level of credit score. Let's say a 650, 670 credit score, or even a 700, and they want 8.1%, but the owner is offering you 6% interest rate. Now, the difference is going to be is that the owner finance may require more down, let's say 20% or 30% down, and on a $300,000 house, that may be anywhere from 60 to 90,000. So let's say you have cash in the bank right now, okay, but the interest rates are too high. You could go to, there are a lot of houses on the market where you go to any seller and say, look, what if I gave you $100,000 cash on a $350,000 house? I want a 6% interest rate. I want a 30-year term, but I want a balloon note. What a balloon note means is in 5 years of that loan, after 5 years of having that owner finance, you have to refinance it into your name. But the payment term is going to be for 30 years, which means you're going to have a 30-year mortgage. But basically what they're saying is that, hey, in 5 years, you have to pay us off. But your payment term is going to be for that full 30 years. So essentially you have a 30-year payment, which brings your payment down, but in 5 years you have to complete the loan. Okay, great. Easy enough. So this is what I want to encourage younger people to do now that we're heading into a wild market. And look, in 2008, there was a ton of this. In other years, there was a ton of this. This is nothing new. This is not a new market to people who have been around a while, okay? This is just new to you. And what I would encourage you to do is explore owner financing options and flexible payment terms. And I want you to remember something. This is so key. Everything is negotiable. There is no set thing, period, on earth. If you go up to someone and they want something, remember, as a buyer, for the most part, you're in control right now, okay? The sellers are no longer in control. The sellers have been in control for the past 3 years. Buyers are in control. If you cannot get approved by a bank because of your debt to income ratio, which is malarkey, go and see if you can get an owner finance deal. A lot of times you can get a better interest rate. There's no credit check. And look, if you get that contract written by a lawyer and your agent takes that to a lawyer or wherever the case is, and it's a legit contract, it's as good as a bank contract. The only difference is instead of the bank repoing your house, the owner would then take possession back of your house and you lose all the money that you put down and the payment. So that is what owner financing is in a nutshell. There are also different ways to finance houses. And this is called creative financing, where you actually go to private lenders that have, these dudes just have $1 million laying around. And they don't mind loaning out $250,000 on a house at 9%. Just because guess what? The stock market is only going to give them 5 or 6% conservatively, okay? So they'd be willing to loan you money with what's called an asset-backed protection. This means the asset, which is the house, is backing the loan, meaning if you do not pay the payment, they keep the house, okay? So there's a million different ways right now to buy a home, and right now is the time to get creative and start looking, okay? You are in control if you're a buyer. And if you're a seller, it is also a great time to say, hey, look, I tried putting this on the market. The market responded by it not selling. Great. Try an owner finance deal if you do not need the money, okay? And a lot of times the banks, let me put this out there, if let's say you qualify for a 30-year mortgage, if you can show the bank on the house you're trying to buy that you have sold your house with an owner financing deal and that you have that steady stream of income and you have a contract, they'll go ahead and finance your house that you wanted to buy anyways, and you have a residual monthly income off your owner finance deal. It's something to think about. So I hope this helps clear up some of the stuff that's going to be happening in the market, and you're going to see more and more and more of it continuously. Okay, this is what's going to happen probably for the next year, is the interest rates stay high, okay, until they get back down to closer to 5%. And also fees from banks. It's expensive, okay? So an owner finance deal, the good thing about them is they're clear and simple. The fee for the lawyer may be, I don't know, $500 to get the contract drawn up and it finalized and everything like that. So just something to think about. I hope this clears up anything that you may have worries about. Or don't be worried about owner finance, as in don't be scared of it. It can be a good deal, but make sure you take it to your lawyer and you make sure have them look over the contract and make sure it's good for you. So I hope this helps. Thanks again for looking, and we hope to see you soon. And give us a call if you need anything in real estate. We want to be a resource for you, okay? Whether you're buying or selling, give us a call.